Howdy, everyone. This episode is brought to you by Fireblocks. Love this company. You'll be hearing all about them later from me later in the episode. But now, on with the show. All right, everyone. Welcome back to another weekly roundup edition of On the Margin. Today, I am joined, as always, by my intrepid co-host, Mr. Mark Yusko. What's going on, Mark?
Intrepid, beautiful, with the adventure word behind you on the wall. Intrepid is great. All right, and I'm an adventure. I'm going to do the review. So I got the crimson bear market pants and the Bitcoin roller coaster. And, you know, everybody thinks that the negative of the roller coaster is the ups and downs. No. That's the fun part. The bad part about roller coasters, you end up in the same place. A year from now, unfortunately, we're going to end up in the same place. And we're probably going to have a lot of this, but unfortunately, we're probably going to end up
I'm in complete agreement with you, Mark. And you know what? The background on my wall here agrees with your socks. For those of you who don't know, I'm in Sedona right now, Arizona. I'm in an Airbnb. There's a little map on the wall that says Chase Adventures behind me. Not my personal decoration choice, but there you go. If you ever find yourself desiring to put something like Live, Laugh, Love on your wall, please fight that urge. I'm doing this for your kids in the future.
Fight the urge.
It's not a good idea. But yeah, Mark, I'm in complete agreement with you, by the way. I think we end up basically exactly where we are with crypto a year from now. There'll be a lot of ups and downs. You know what's actually interesting? So before we get into our stories, this doesn't feel like the sentiment 1 month into a bear market. This feels like sentiment 9 months into a bear market. Because if you remember in 2018, it actually took like 6 months before everyone kind of woke up and was like, ooh, yeah,
yes,
it's actually not going to bounce back. So I feel like we're at that stage of the bear market where people are angry with each other and my coin didn't go down as much as your coin. We haven't got yet to that beautiful, peaceful lull, right? Which is that it's all going down. We're all in it together and we're just doing shit posts on Twitter with each other. That's the beautiful stage that I can't wait for personally.
Yeah, no, you're so right. And, you know, I did my 10 surprises for the year yesterday, and I did my usual crypto surprise. And this year, the surprise was that, you know, we're pretty much going to do nothing for the year in Bitcoin prices. But there are monster opportunities, what we were talking about, Jeff, last week, in the metaverse. So many investment opportunities. And that's the funny thing is being unhappy because there's price discovery going on between people who chased after something. I talk about this all the time. There are 4 types of market participants. There are investors who buy things because they do work on them and understand fundamentals. There are traders that buy stuff and they don't care about fundamentals. They want to sell things that are going down. They want to buy things that are going up, but they want to scalp a certain amount of profit, get out and be done. Perfectly good market participants. There are speculators. Those are people that buy something because it's moving, mostly because it's going up. They don't chase stuff that's going down. And those are less good for market health. But what we have now is degenerate gamblers. And those need to be expunged from the system.
I would completely agree with you. And I would add this too, that there are 2 types of people that talk about fundamentals: actual long-term investors and retail that is high on hopium. If you cite fundamentals, make sure you are in the former and not the latter camp. That's what I'll say.
Not the latter. Hope is not an investment strategy, Michael. It is a 4-letter word.
4-letter word, baby. I agree with you on that. All right, let's get into it because we got a bunch of interesting stuff to cover today. We've got some charts for you, but we want to make sure that we get to this really interesting story. So I know we were talking about this before we got on the recording, but apparently the White House is going to release details about how they're regulating crypto as a matter of national security. Really interesting. There's a lot of stuff to unpack with that, but first I want to get into our chart deck for the week. All right, this is just one of my favorite charts ever. I think we've actually shown this before, but just to like set a framework for everyone. This is basically every reason to sell since 1926. So you're literally just looking at a chart of the S&P beginning in 1926, and basically every big scare and major reason why you should have sold, at any given point. Starting with Black Thursday, October 28th of 1929, walking through some of the biggest scares, Sputnik, the assassination of JFK, the Vietnam War, the oil crisis, the Iran hostage crisis, the Clinton-Lewinsky scandal. I love that one made it on here somehow. The dot-com bubble, the great financial crisis, COVID-19. And you know what? The big trend is, if you zoom out far enough, it's all going up. So just a little reminder.
Of course, and it goes up 2 out of 3 days. Now, there are meaningful periods of time.
I would say, yeah.
In 1929, you needed to get out and go to cash and stay there for 2.5 decades. In 1968, you needed to get out and go to cash for 14 years. And in 2000, you pretty much could have gone to cash for 20 years and actually outperformed the market. So there are times, and I think we're at one of those times again, where cash will outperform equities over a meaningful period of time, measured in years and decades. But you're absolutely right. Over the long term, the right time to sell is never. We've talked about this with Amazon. And, you should post in the show notes Howard Marks' recent memo.
I read that. It was really
selling,
good.
Right? 90% of our industry is about buying. All the research is about buying. All the people talk about on these shows is buying. No one ever talks about selling. And so he actually did what you should do, is you should take some time and think about selling. And the answer is, if you buy something as an investor because you understand it, believe in it, and really do research on it and embrace it, then the right answer is never. And it's my pinned tweet on Twitter, right? You make the most money, the greatest wealth is created by investing in something you believe in before others even understand. And you don't sell it because there's disagreement on the future value. That's what volatility is. Volatility is simply disagreement on future value.
You know who actually does think about selling is Renaissance Technologies. So that should tell you the importance of that. That's Jim Simon's group, by the way.
Well, they're traders. Again, they're not investors. They are traders, and they are spectacular at it. And I said that is investors and traders are perfectly good market participants. Speculators and gamblers are not.
So speaking of traders, what we're looking at here, and both these charts come to us from Michael Batnick, so thanks, Michael. We're looking at the Russell 2000 here, and what you see is the red dots. That's a period of time when the Russell has gone down more than 2.5%, but closes up 1%. And basically the observation here is that these intense periods of volatility either happen at market tops or at market bottoms. So in the words of Michael Batnick, or his little emoji, it's basically like, I don't know. That's what's happening now. So take your pick. We're either at some sort of market top or bottom.
No, I love this. And I'm looking down because I'm searching for something. I want to show, I tweeted about this last night. This is the infamous puking brontosaurus pattern. And somebody sent me back, this is amazing. Someone sent me back this thing that actually the apatosauruses do projectile vomit. There's a whole thing about the apatosaurus's projectile vomit. And I did not know that. So I learned something this morning. But this is the puking dinosaur, or puking brontosaurus.
Yeah. So this is what's going on under the hood of the puking brontosaurus. So basically, just to give everyone, the update, we're recording this on Friday after the FOMC. So we're now pricing in the probability of 25 basis point hikes, or the possibility that's like over, I don't know, it's hard to keep track. It's over a 50% probability that the first hike that we get in March is going to be a 50 bips hike. So basically on the right here, you're looking at, I would take the under on that too. I'm with you on that. You're looking at the implied Fed funds rate change from the current level. So you kind of get a nice little view of like what, the market is pricing in for the Fed fund rate going through the end of 2022. Basically, one of the things I wanted to get your opinion on here, Mark, is, as the expectation of the Fed funds rate goes up, what we're essentially seeing is a yield curve flattening, right? So we're looking at the spread here between the 2-year and the 10-year, and the 5-year and the 30-year here, which to me basically says people are just pricing in lower growth, certainly in the future, or, obviously
increasing chance of recession.
Right.
A flat and then ultimately inverted yield curve is the definition of inflation. And here's the thing. If short-term rates were where they should be, when I say should, meaning 140 years of data, right, in the modern era, 140 years of data, short-term interest rates were equal to nominal GDP growth and inflation over that entire period, averaged 4%, and they've been different from that since the global financial crisis. And look, the time to raise interest rates, I was actually on CNBC, it's now 8 years ago, which is hard to believe, 2013. And Ms. Yellen was getting ready to do one of her things. And they said, what should she do? Said she should raise rates 3.5% tomorrow. And Melissa was like, what are you talking about? The world would end and we'd end up in a recession. I'm like, no, we would not. We don't need, emergency stimulus measures when there's no emergency. The reason we have zero interest rates, again, we've talked about this, is not because you and I get to borrow at Fed funds. Who borrows at Fed funds? The banks. And then they lever up 12 to 15 times and buy treasuries because no one else will buy the treasuries because we're so far in debt. So this Ponzi-nomics scheme has to rock on. And so the idea that they're going to raise rates is silly. The right time to raise rates was 2013 when the economy was starting to recover. Now the economy is weakening. Right? Fourth quarter growth just came in less than people thought at 5.9 instead of 8. And it's going to be worse in Q1. Germany is going to come in negative for Q4. Think about that. Japan's already negative. So the whole world is going back toward recession. And then we're talking about, the good news is we have some crazy people talking about more authoritarianism and lockdown. We do have the Danes and the Swedes now saying, nope. All of it, gone. All restrictions in Denmark, gone.
I'm with you. I'd also look, I think the Fed looks like they're about to start tightening into recession. I think it's pretty interesting that the spread between the 5-year and the 30-year, the yield curve is actually much flatter than the 2-year and the 10-year, where obviously the Fed has more control over kind of the shallow belly of the curve here. So what to me this says is that the market says, hey, we do not expect growth and we're extremely concerned about a recession. And, the chart that I just love to pull up here, I'd love to get your perspective on gold because, real yields are jumping and gold is dumping. And to your credit, I'm going to point out now, there's a bit of a
JP
bit of a chart
Morgan.
crime because I'm not showing the exact same time period here. We're going back 1 month for real yields, and I'm only looking at the last week for gold. But honestly, these both came from the Daily Shot. They're nicely formatted, and I was trying to do it myself, and it looked way worse. But, if you zoom back a month, the chart for gold wouldn't look nearly as bad. But yeah, gold is just a bit of a weird enigma. I don't really understand why it's performing like it's doing.
No, it's not at all, right? It's totally dissociated from the market because it's being spoofed by the largest, criminal organization on the planet. And look, they just got fined $920 million. But they made $20 billion in profit. So that's actually a pretty good deal. I would actually take that deal. Pay 1 to make 20. I would do that and not have to admit guilt or wrongdoing. So look, this is what precipitated the collapse in Bitcoin prices. The same thing. You allow futures to exist in a commodity market, whether that be oil. Back in 2014, they did the same thing to oil. Whether it be gold, they've been doing it for 20 years in gold. And now it's in Bitcoin. And mark my words, BlackRock's spot ETF will be the only one approved. I'm not going to say when because it's still not time yet, but it will be the one approved. And all these other guys who should be approved because they were there first and it was their idea, like the Winklevoss twins, et cetera, those will not be approved. BlackRock's will be
even
approved.
Fidelity's got denied. That happened yesterday as well.
Exactly. Because they're not part of the cabal. They're not part of the cabal.
Here's one of the interesting things, too. I think with this chart, when I look at real yields jumping and gold performing like this, I think, immediately what hops to my mind is that this is actually a dollar story. So this is the Dixie, basically looking at it over the course of the last year. What you can see all the way over on the right there is this huge spike recently. So for me, I think what's happening here is that the safe haven asset is the dollar. And it's
no, don't be fooled. Don't fall into the trap.
Tell me why I'm wrong.
It's a trap. It's a trap. Dixie is the worst. Everyone uses it for the dollar. It is not the dollar. It's the euro and the yen. All this means is crazy Kuroda-san and Lucy Lagarde are printing more than the U.S. And here's the way it works. Every year around this time during WEF, the big four, U.S., Europe, Japan, and China get together. And one of them goes in the hot box. And they say, you have to have the strong currency. Now, that is an oxymoron because all of these fiat currencies are weakening. So it's a race to the bottom. But one gets to be the least weak. Okay? And it has to strengthen. Now, the problem with strengthening in a global world where there's exchange of goods and services is you want to devalue your currency so you can sell cheap goods, right? The Chinese are mercantilists. The Europeans make the Chinese look like pikers, by the way. They are the greatest mercantilists in the world. Go to China. It's all German cars. Like, look, machine tools. It's all Japanese machine tools. So every country wants a weak currency to sell their goods to foreign buyers. And so this is not the measure. The measure of currency strength around the world is the US dollar CNY. And RMB CNY is up 2% over this period because the Chinese currency is the strongest because they took liquidity out of the market first, which is why their market sucked last year. They are now liquefying their economy to make up for all the bad loans in real estate. So their stock market's going to rock this year. It's going to be the best performing in the world. And this is simply a relative value measure of the euro, the yen. And so this is basically saying that last year, the dollar went down versus the renminbi. Not a lot, but it went down. But the yen went down 10 and the euro went down 8. So Dixie looks like it went up.
I'm with you. I kind of take this from the perspective of people, from an outsider's perspective on finance. And honestly, when I look at a lot of these relationships, I think they've broken down from a first principle standpoint a long time ago. And the only reason they still exist is because they're correlated in the minds of people who are trading these things. So, when I look at the Dixie in general, I totally agree with you. I think you're right, but I think a lot of people still pay attention to this, and for that reason, it still moves markets. What I will say too, in general, is that I think speed of acceleration here is a big thing to point out. So, I do think like if you look at 2022, right, the move in the dollar index, that's a pretty rapid move for the dollar. And I would say that it's not something that the Fed is paying attention to yet, but I think if it continues to accelerate at this pace, they will. Same thing with the stock market in general. I don't think the Fed blinks if it sheds another 10%, but if it does in 5 days, I think they'll wake up pretty quickly. I'm not sure we're at that point yet, but it does look like volatility is back, baby, is what I...
Well, and the thing is, if you zoomed out, if you zoomed out, right, for 2 years, you'd see that it's actually dead flat.
It's in its normal range.
The dollar has not moved
100%.
for 2 years.
Yep.
It's dead flat. If you zoomed out for 10 years, you'd see it's down. If you zoomed out for 30 years, you'd see it's really down. It's a secular decline. And that is the way it is. Now, that big spike that you rightfully point to in January, that is flight capital, right? What is happening is fear is rising, and people are liquidating or being liquidated, and that increases the demand for just cash and currency. And so what you do see, and it is weird, and it's partly because how complex the world is and all the lending and borrowing and the carry trading that goes on, but the yen, which is the worst currency in the world, I mean, they are going to nuke the yen. They have to because they have so much debt. That's their only choice. But it actually strengthens during these periods of risk off because everyone has to unwind their carry trade and pay their margin calls. And so, again, Dixie, it's really a measure of Western currencies. It has nothing to do with emerging markets, a whole nother story. You need the trade-weighted basket from to look at that. But anyway, good point that it is not what people were expecting.
Yeah, I would just call it out as something to pay attention to. I mean, and if you look at how things are actually performing in the stock market right now, so what we're looking at right now is S&P, but basically it's a measure of value and growth, both in small caps and in large caps. So we're looking at the S&P 500 versus the Russell 2000. So what you really should be looking at and comparing is, so the purple one is, or the purple line there is S&P 500 value ETF, and the orange line is growth. So everything is down, basically, at least over the course of the last 6 months. But the best performer here is large cap value, and growth is really getting taken to the cleaners. And for small caps, it's getting punished even more. And these, what you're seeing on the right here is basically just thematic ETF returns. And you're seeing a lot of those, like ARK is like at the very bottom here, which is getting absolutely crushed. I had to, this was one of the charts I was going to use for our...
The ARK has been swamped.
Dude, the ARK
has been swamped. It's taken on water,
yeah,
baby.
So this is actually another chart here. We're looking at ARK versus just the NASDAQ in general. And
But Michael, we've been talking about this, right?
I know.
These are misnomers. 40% of the companies in the Russell 2000 index don't make money.
I know.
They don't make money. So all this is the realization, and it happens every 20 odd years. You get a period for a couple of years where people are like, profits. What are these things you call profits? We don't need profits. We just need growth. We need eyeballs.
I know.
We need TAM. And they totally forget. And this time, we actually pushed the nonsense twice as high as the 2000 bubble, which means price to sales, right? In 2000 bubble, right? Which remember, the 2000 bubble went down 84% from peak to trough. NASDAQ went down 84%. Okay. We pushed 7% of companies to greater than 10 times revenues. Now remember, if you pay someone 10 times revenues, not 10 times earnings, 10 times revenues, to make a 10% return, they have to give you all their revenue for the next 10 years. And that just can't happen because they got to pay taxes and they got to pay their employees. This time, 15, twice as bad as 2000. And this is a reversion of that. And if you overlay the non-profitable tech on the 2000 NASDAQ bubble, we're 2/3 of the way down. We got another third to go. So it ain't over, right? We got a lot of pain. And we've talked about companies like Peloton, right? I mean, Peloton,
But you know what my favorite thing about Peloton is? So we got the Peloton chart up here too. It's done a complete round trip since, it became one of these pandemic era darlings in, April of 2020. 3 months ago, Peloton was a sexy brand. Now it's an iPad taped to a bike. You know what I mean? Like it's complete. The way people are looking at it,
it's like Tesla. It's an iPad
different.
taped to a Mazda RX, 6 or whatever, M6.
Yeah.
And Tesla's round tripping. And look, people are going to hate on this. And I shouldn't say it because now we'll lose watchers because everyone loves Tesla. The cult of Tesla is about to bust, and we're going to see how meme stocks. Okay, remember what a meme stock is?
Yeah.
A meme stock is something that you buy because other people are buying it. You don't do any work on it. You don't think you have any knowledge. You just buy it because other people are buying it. It's got a picture. Dogecoin, Shiba, Freak. These are dog shit. And all of it is going to zero. Not Tesla. Might not go to zero. But those things are going to zero. Yeah. Literally going to zero.
Yeah. Well, I think people are waking up.
AMC, GameStop, all these things have a lot of pain left. A lot.
I would agree with you. And what the last comparison that I'll make, and we'll kind of end on this, is we've actually been here before. So this comes to us from a guy,
Michael. This is the best chart we've done. This is awesome. You're good. You are so good.
I would love to take credit, but I actually just ripped this directly off Twitter. Macro Blonde, if you're watching this, you've been putting out some great content recently. So guys, you should go check him out. He puts out some great stuff. But basically what we're just looking at here is
the key is, as great as the creation of the chart is, which we give him all the credit, and we should all follow him, the skill, and you are the master of this, which is why I love doing this show. You are the master at synthesis, right? We are drowning in information. It is impossible to consume all the information. And what's really hard is to find the nuggets, and you find the nuggets. This is the nugget.
Thank you. I'm blushing over here. But I would
you're awesome.
Love to get your take on this, because basically what we're looking at, it's Mr. Blonde Macro. I can see his name actually here on the chart. So we're looking at basically a 6-month trading pattern around the period of the famous Powell pivot, right? 2018 to 2019. And what we're looking at here is the S&P, and we're also looking at the high yield credit spread, basically. So, it looks very much like, right, to take us back in time here, basically in the end of 2018, the Fed and Powell was really trying to hike rates, right? And there was some very tough signaling to the market that, hey, we're going through these rate hikes, and they kind of digested 1 rate hike, 2 rate hike, 3. And then we just got to a point where the market puked, and he did his famous pivot, right? So what it looks like, history is beginning to repeat itself, because the market is beginning to digest these rate hikes. We've had one leg down. If things were to happen exactly like it did last time, which usually doesn't, usually it rhymes, but it doesn't repeat exactly, we'd see another huge correction in growth stocks, and we'd see a yield spike in general. So,
and we'd see it in March, which is seasonally when these things happen. It's when it happened in 2000. It was March 24th. And then what happens is you get this big bounce. You got a speculative bounce, kind of the return to normal bounce in March to September. And then you almost got back to highs. In fact, I think maybe NASDAQ maybe even did make new highs. S&P didn't quite. And then the bottom falls out.
Yep.
And then you get the bear market. And that's what 01. And the problem is the same thing I think is going to happen here, because what causes the real bear market, right, the real down leg, is the bad companies, the Enrons, the WorldComs, the Time Warner AOLs, all these really just egregious, Cisco came out and said, yeah, all those earnings we told you we had, yeah, those weren't real. So we restated our earnings. So the accounting shenanigans come to light. The over-levered companies are allowed to disappear. And look, the Powell pivot is coming. He will not raise 5 times this year or 7 times, as Jamie Dimon says. It's just not going to happen. He might actually go through with it in March. I don't think it'd be 50, but I think he might go through with it in March. And when this puke happens, that will happen, he'll stop. And it won't work. It's just like the Fed isn't in charge of inflation, right? The inflation that we had was oil prices and used car prices because of chip shortage, because of stupid decisions on lockdown. It has nothing to do with the Fed. What the Fed is doing in the central banks around the world, they are devaluing currencies. That's different than inflation. And so we talked about that last week.
Yeah. Well,
or 2 weeks ago.
Well, here's my question for you. Like, let's say in the most hawkish scenario, right? The Fed gets the Fed funds rate to around what? Like 2.5%? CPI is at 7. What's that even going to do?
Well, CPI will be 2.5 by the end of the year, more likely than not. And so look, if he got to 2.5, that would be awesome. In fact, in my mind, he should do it tomorrow. And we should take the pain. We should cleanse the system. We talked about this. Winter is not bad. It allows the things that need to die. And we need Dogecoin to die. We need Shiba to die. We need, not that Peloton, the company, should die, but the equity might not be worth anything. And there are a whole bunch of companies like this that, 40% of the Russell 2000, right? Those equities are worthless.
Yeah.
We need to settle up. We need to give the companies to Howard Marks and Oaktree and all the distressed debt buyers and let them restructure and look, the oil patch did this. This is why oil stocks are doing so well.
Yeah.
They took their medicine 2 years ago. A whole bunch of them went away. They restructured. They got rid of the debt. Debt holders got screwed. But the people that buy the distressed debt on the other side make a ton of money. And the people that buy the restructured equity make a ton of money. And, we've been, fortunately, it's the only thing that worked in some of our traditional funds. Because I still have a team that does traditional funds. I spend all my time in digital, but we still dabble in traditional. We've been overweight energy for a year and a half, and it's the only thing that's worked. I mean, FANG, my favorite, Diamondback Energy, has crushed FANG, Facebook, Amazon, Netflix, Google, and it's not close.
Yeah.
It's not close.
Yeah. Well, the reason I like that chart too is because this guy, he was paying attention to credit spreads in general, which, investors care about the stock market, but you can be sure that the Fed is looking at the credit markets, probably for signs of stress in general.
Yeah, I'm gonna check out, because those are really good charts, really good insights. So he gets all the credit, and you get the credit for finding them.
This episode is brought to you by Fireblocks. I talk to a lot of fast-growing crypto-native funds, crypto banks, exchanges, and the like, and they all tell me they have the same 2 problems. 1, their treasury management setup sucks. They've got analysts wasting time and money on manual transactions. 2, they are not happy with their current security setup. They're sharing passwords, they're sending test transactions, and they're worried that their funds might be at risk. Fireblocks is a platform that solves all of that for you. They're a one-stop shop portal which automatically plugs into exchanges, trading venues, etc. They source deep liquidity and solve everything from day-to-day crypto transactions all the way down to complex DeFi strategy. And the best thing about Fireblocks is that they offer scalable solutions with industry-leading technology. Doesn't matter if you're a 2-person crypto fund or a 2,000-person crypto exchange, these guys have you covered. And the last thing that I'll say about this company is that I have known them for years. They are a high integrity team. They ship product like no other. I would trust them with my own funds. So click the link at the bottom of this page and tell them that I sent you. Very, very important that you click the link at the bottom here. Otherwise, they're not going to know that I sent you. And then how am I going to get credit? So help a brother out. Click the link at the bottom of this episode. Tell him I sent you. He's great. He makes my job easy. All right. I want to get your thoughts on you moving over to the crypto side of things this week, basically. So there's this article came out. I saw it in Barron's first yesterday, but basically the White House is going to move to regulate crypto as a matter of national security. And I'll give a nod to there's a guy, Jeff John Roberts over at Decrypt, who did a really great kind of feature post, basically talked to a bunch of ex-regulators, current heads of crypto companies, et cetera. And basically, it looks like the area that the White House is going to focus on is actually going to be stable coins in general. And the idea, to summarize everything, is that they're going to try to move them into the banking system, into the traditional banking system. And what was pretty interesting, and then I want to get your take, is that, especially in his analysis, it actually looks like Goldman Gary, the great villain of crypto, is actually not really in charge here. And a lot of this direction is actually coming from the Treasury, right? And Janet Yellen. So, yeah, I mean, I have a lot of thoughts on this, but I'd love to just get your take in general about, what were your first thoughts kind of when you saw the announcement?
I tweeted about this last night. It's the best, in air quotes, read worst, legislation money can buy. This is fully bought and paid for by the banking lobby. The White House doesn't have a clue what they're talking about. Not one clue. There's zero clue. This is being drafted by the banks, handed to them, paid for with a big sack of money. And look, this is what incumbents do in every cycle of innovative disruption.
Yeah.
Every single time, right? They pay legislators to pass useless regulations to slow down. I think we talked about, when the horseless carriage came, they passed a law where you had to have a person with a red flag walk in front of the car, right?
Seriously?
I mean, just silly stuff like that.
Yeah.
And that's what this, because look, it's the same reason China banned crypto, because money was fleeing a bankrupt financial system into crypto. It's why they shut down Ant Financial, because money was fleeing into the 6% interest in Alipay. And look, that's why they're all over people like BlockFi and Celsius and Gemini and Coinbase for these earn products.
Yeah.
Because if I have fiat and I'm in financial repression, I put it in the bank and they don't pay me anything. Now, it's not as bad as Europe or Japan, where you actually have to pay the bank to hold your money. Nonsense, right? All of capitalism breaks down with negative interest rates. So it's bad. So if I take that fiat, I convert to a stable coin, and I give it to one of these CeFi companies, they'll pay me 6 to 8%. I would do that all day long. I do that all day long. I invest in those companies all day long. I love them. It's awesome. Banks are like, WTF. No, that's our money. See, that sentence. I like that I said that sentence is the key. People think it's our money. It ain't your money. It's their money.
Yeah.
It's JP Morgan's money. It's Bank of America's money. And they don't like that their money is leaving the system. And so they are doing everything they can to keep it in, because at 15 times leverage, if you lose your deposit base, suddenly you're 17 times levered or 18 times levered.
Yeah.
And remember what happened last time we got to 20 times and 30 times levered in the global financial crisis. Bad stuff happens.
Yeah.
So this is, look, it reminded me of, I don't know if I've told the story before, but my dad wanted to climb Mount Mitchell, which is the highest point east of the Mississippi, for his 80th birthday. I'm like, okay, let's go do it. And we went and did it. And it took us a little longer, but he did it, which was awesome.
Yep.
And my mom was at the top waiting. And she started to have a little panic attack because it was taking us longer and it was starting to rain. And we took her down the hill and we went to the paramedics and she said the magic word, chest pain. oh, we got to get the helicopter. We got to get you to the emergency department, and we got to run all these tests. So they ran this test and for the enzymes, no enzymes. So they're like, oh, well, we have to admit her. I'm like, why? There were no enzymes. Oh, well, she said chest pain. I said, no. No enzymes, no heart attack. It was a panic attack. And I'm glad you did the test for enzymes, but he said national security. Because if you say national security, oh, you can do whatever you want. Think Patriot Act, you can do anything you want as long as you say the magic word.
Yeah. I've got two takes on this.
Even if it's illegal and immoral.
Well, at the end of the day, I just think if the U.S. actually goes through with this, if there's regulation to move stable coins back into the traditional banking system, it'll be a bigger own goal than China moving miners out of their jurisdiction. It's just like, it's this unbelievable irony that crypto is basically a network transfer out of the old fiat system into this new system that makes a whole bunch of sense. And the big irony, despite all this rhetoric about Bitcoin overtaking the US dollar, is that the US dollar is still succeeding in this ecosystem, right? Because ultimately people need some stable store of value. I get that Bitcoin is over time, but they need something that's not going to fluctuate hugely in the meantime.
Correct.
Stablecoins are a mechanism to propagate the US dollar in the new world. It's this unbelievable seamless transfer that the US just got handed on a silver platter. And they're literally threatening that. Now, I think the other take here is that it doesn't really matter at the end of the day what the US does here. The biggest threat that the US is actually going to do, and Matt Levine actually put his finger exactly on this in his he recently wrote something. I always love his takes on crypto, is that the only thing he's going to crush here is Circle. It's going to be good for Circle in the interim, and then it's going to completely screw them. Because what's going to happen is you're already seeing the beginnings of decentralized, algorithmic stablecoins. This is really early days. And frankly,
who owns Circle? Who owns Circle?
Jeremy Allaire.
Yeah, but didn't a company buy them? Goldman something?
Sachs.
Didn't they buy
But
them?
look, it's like...
Yeah, didn't Goldman Sachs? Didn't Goldman Sachs... And didn't Gary used to work at Goldman Sachs?
There's a connection there. I'm with you, man. But at the end of the day, too, it's like, look, that's a good interim solution. But I'd love to actually know what he thinks about the end. Because a lot of really smart investors that I talk to in DeFi, they're super bullish on these decentralized algorithmic stablecoins like MIM and Frax. Even way back in the day, remember there was a Basis. That Basis was the algorithmic stablecoin. And I remember thinking back then, this is the way it's obviously going to work in the future. It's just way too early. If regulation is applied to these good faith actors like Circle, Paxos, etc., all they're going to do is make them shitty products. And Matt Levine pointed this great thing out at the end of the day, which is that the regulators. You basically got two different systems in crypto, these totally unregulated system and the ones that are actually trying to be good actors like the Geminis of the world. And look, we'll get into a little bit. I want to get I don't know if you've seen this whole thing with Frog Nation and Danny Sesta and the roiling that's going on underneath the hood in DeFi right now, which is pretty interesting.
Right.
But look, there was a guy who's in charge of an $800 million wallet who's basically a career criminal of the last 15 years. Under the cloak of anonymity. So you've got that going on. Not that that's all happening in DeFi, but there is that risk, right? If you're operating in that ecosystem. And then you've got all these good faith actors that are basically like, guys, please let me follow the rules. It is safe as a consumer to be interacting with Coinbase or Gemini or BlockFi or whatever. And the SEC is basically slapping them down, but saying, oh, as long as you're completely decentralized over here, then it's fine. And just the dichotomy in terms of how this space is being regulated right now is so bad from a consumer standpoint. It's just so freaking
your
horrendous.
problem is you're logical. You can't be logical in these situations.
Yeah.
This has nothing to do with logic. This has to do with money and power. And the incumbents like being in power, and they like it being their money. This is the critical point, right? What Bitcoin is, what crypto is more broadly, is our money. Right? It's the people's money. And then we don't need the banks, right? Self-sovereignty, be your own bank, all this stuff. The banks don't like that. The banks have had an 800-year run. I mean, longer than that, but really, really dominating modern finance for 800 years. And that's ending. And it doesn't mean it's ending like they're going to disappear tomorrow. It's not like a meteor. It's more like an ice age that slowly, one species goes extinct. And I did this very cool Real Vision interview with Brian Estes. And I did one with Caitlin and one with Dan Tapio. But Brian is amazing in that, his motto, right, is adapt and overcome, because, he had to, and something we should all live by. But it's also what companies should live by, and industries and institutions. They should adapt and overcome. And yes, there are disruptive challenges to banking, to money. But the U.S. could and has an opportunity to be smart and to show leadership, right? Create a U.S. dollar stablecoin. Create USDC. Now, don't do all the sinister, we're going to control your money like the big giant guy, Jabba. No, the what's his name from the Spider-Man movie? The bad guy in the Spider-Man movie.
Is this the most recent one? I haven't seen it yet.
No, the one, the metaverse one. God, what's that guy's name?
The multiverse?
The big guy, giant guy.
The multiverse?
It's not Mr. Big, but it's something like that. Anyway,
I haven't seen it.
It'll come to me.
I got it.
Kingpin. It's like Kingpin. Don't listen to Kingpin talking about, yes, we want to control how you use your money, and that if we want to turn it off, that's okay. He wants to control your calories.
I like that your mind went to Jabba, by the way. Were we thinking Jabba the Hutt here and Kingpin, and that was
Jabba the Hutt.
The melting of this?
No, I said that. I said he looks like Jabba the Hutt, and they're like, no, he actually looks like Kingpin from the Spider-Man movie. And I was actually watching Boba Fett last night, and they went back to Jabba's place with that big sand thing to get something out of the gut.
Yeah.
But
I got to catch up here. I'm behind on all my Disney stuff. I haven't seen the new Spider-Man. I heard it's like the best Spider-Man yet.
I am such a fan of Marvel. And here's the crazy thing. So just show how dumb I am as an investor. I remember watching the announcement of Carl Icahn buying Marvel. I was working for this asset management firm. And I remember my bosses, who were value guys, say, that is so ridiculous. That price is stupid. This guy's an idiot. He's going to lose everything. $6 billion. Okay. They made more on the last Spider-Man movie than $6 billion. And then my favorite, I just heard this the other day. I was talking to this guy who creates worlds in the metaverse for some of the biggest people in the world, like Madonna and Disney. And
that's so cool.
He said, this guy is amazing, amazing, and hopefully we're going to own a piece of it. But what's so cool is he said when Disney bought Marvel, they gathered all the senior executives and said, here's the deal. If anyone calls you internally with an extension that says Marvel, doesn't matter what level they are, pick up the phone, they're your boss. Just let that sink in for a second. Yeah. They are your boss. This is a company that we all think of as the greatest company ever. They're like, no. Disney's good. Marvel is, and what is Marvel? Marvel is a collection of NFT characters.
They're going to, when they make their eventual pivot into NFTs, they're going to actually murder it. But just to conclude the thoughts on like stable coins here, I just think that the U.S. has actually been handed a gift here, and this is a challenging moment in leadership. I am not one of those people who's like, the incumbents have to die. I think overall, this is probably how these transitions happen throughout history. I think they're probably, like, we just read them one line in a textbook, but I think they're probably always pretty messy, and you have human interests fighting, and, I think at the top, Janet Yellen, I don't even know how old she is, but the woman's it's in her 70s. This is tough. This is tough to grasp, and like a lot of the things that you have in your head are changing in real time.
The mind is not as plastic in your 70s and 80s.
Yeah.
It's just not. It's just not. And
we talked
I'm
about
getting
this.
Closer to that.
I got corrected the last time. Apparently that's changed as the model. Since I've been taught it in college, that's not true anymore. I don't know.
No, it's absolutely true.
Okay, cool.
It's absolutely true. Now, I think it happens later, right? That the plasticity starts to, but it is 100% true.
Yeah.
And come on, all of us know lots of stories of how people get set in their ways, how they're not open to change. Again, that doesn't make you a bad person.
Yeah.
It's just the biology functions differently. And we have not figured out how to replenish all of the chemicals that start to wane as you age. The one thing that's really scary to me that I hadn't really thought about is this whole thing that how social media and these lockdown measures change. Like when you and I are together, I call this the best hour of my week because my oxytocin gets going because we are now we're not together like physically. I can't give you a hug and all that, but we're bonding. And what isolation does and what watching everybody else have fun while you're looking at Instagram does is it reduces these chemicals that make us communities.
I'm totally with you. So here's a big thing that I do not know how this is going to get solved. So, when you're looking at the labor market in the U.S., okay, the boomers, a lot of them retired early and they're not ever coming back to the workforce. Okay.
Right.
But what's interesting is that a lot of like prime age working people still have not yet returned to the workforce. And I think there's this really fundamental, interesting paradigm that needs to get solved for young people that are entering the workforce in this remote first, COVID first kind of era, in that a lot of people are now used to working from home and don't want, like if you poll young people in companies, they're like, I don't want to have to go back into the office. But at the same time, like when I first moved to New York, that's a huge way that young people like build their social foundation. A lot of people like are moving to a new city. This doesn't work. It doesn't work for younger people. And I'm listening, I was listening to this analysis of like that people don't understand why these young prime age working people aren't returning. It's like, dude, people are a social species. You need to get them together. I mean, the way I'm kind of viewing it right now is like
the Colosseum was built 2,600 years ago for a reason. Right?
Yeah.
Think about that. They brought people together. Now, some of the stuff they did there was not so good.
Yeah.
But they brought people together, right, for communal experience. But getting together for concerts and events and festivals and meetings is part. And look, we are not meant to be isolated. We are not meant to be individual. And yes, it's easy. It's easier to sit by yourself and not have to commute. And look,
it's like working out.
Zuby.
It's like you feel better after you do it, but someone needs to kind of poke you to get off your ass, kind of.
Of course. Do you know Zuby? Do you follow
Yeah,
Zuby?
I do. Yeah, I like this.
So I love this guy, right? I mean, and not just because we got together and had lunch and actually got to physically, hang out with him, but I just love the way he thinks and this whole thing of easy versus hard. Doing what's hard is what makes you better.
Yeah.
To your point, whether it's working out, whether it's, not having everything that you want, whether it is, taking a cold shower versus a hot shower, whatever it is, right? Doing what's hard is what makes us better. And if everything is easy, and I just have this, you remember WALL-E, the movie?
Yeah.
So do you remember they had the big lounge chairs on the boat and these big blob people with their big gulp and their screen? That ain't what we want, guys. Mm-hmm. We don't want that. Mm-hmm. We don't want to sit in a chair and be entertained and drink our big gulps. That is a bad life. We need to be out doing hard stuff.
I mean, it sounds like a motivational poster, but I really do believe it. It's like, even on a cellular level, right? When you're working out, you're tearing your muscles, it hurts, but then ultimately that's how you see progress. And I just think that translates into people's professional lives and personal lives, et cetera. And just to finally close the loop on just this whole stablecoin thing is I actually think, the contrarian play here ultimately is that I think one of the easiest bets is that the market for stablecoins is going to grow. I think if you look at the one chart in crypto that's not suffering, it's actually NFTs, which I don't even want to get into, frankly. We'll do a whole episode on that. That's fighting gravity right now. But stablecoins, the market cap is just going to continue to march up. The question is, what is the constitution of that market cap going to look like? And I actually think if regulators clamp down, it'll be good for USDC in the short run, but in the long run, you're just going to completely screw their business because people ultimately what's happening here is a network transfer from the fiat system to the new system. And if you talk to a lot of the bleeding edge,
it's putting the tech in fintech.
Right. Exactly. And people are, I actually weirdly am really bullish on, this is making me really bullish on DeFi, frankly, and it's making me bullish on non-US DeFi. Dan Moorhead recently wrote they did their, kickoff of 2022 investor letter or whatever. And he, I haven't actually fact checked this, but he said 19 out of the top 20 protocols are not US based. Now, I'm not really sure how he's getting that because, like, I don't know how you put Bitcoin in that. Bitcoin's the top protocol.
Right.
Is it US based or not? Right. But I mean, that's pretty startling. That's pretty startling.
Well,
that should make people sit up and take notice.
It depends if you believe that Satoshi Nakamoto was American or not American, I guess.
That's why I'm saying, like, I don't know how you would apply that methodology to. That's why I haven't fact checked. I don't. But he,
yeah,
they're smart people over at Pantera. I have to imagine.
Dan's pretty smart, and I would say that that's true, and part of it could just be ownership, right? There's more non-U.S. owners of Bitcoin than U.S. owners of Bitcoin.
Yeah, I agree. And it's like, look, as a young person, I've feel like I'm going to spend my career in this industry in general, and I love the United States. I hope we get this right. It would be a real tough question for me if the U.S. put draconian regulation on this and we're going to crush this industry. I don't know. I would have a tough choice ahead of me, frankly.
Look, I've talked about it with my better 90%, and I'm not yet ready to go join Max and Stacy down in El Salvador. Although the pictures they keep tweeting are making me, I mean, now. You can do that when you started buying Bitcoin at $1. Max is famous, but look, I agree with you. I love living here. I want to be American. I don't want to have to move. But if we do something really stupid, and see, I'm even saying we, right? I mean, if we do something, because I helped elect those people just like everybody else. Yeah. If we do something stupid, like yield to the cabal, the banksters, and try to disrupt this, innovation that is good for societies. It's good for communities. You're thinking about NFTs. Why are NFTs holding up? Because they're all about communities, and communities are coming together in times of crisis. Now, there's some other issues that could be going on. There could be some spoofing going on.
There are. Like, honestly, did you look at the Frog Nation stuff this week? I was pretty look, this is probably an overreaction. And you know what? You said, so Jim Chanos, I heard him say this like 4 years ago on a podcast. No one cares about fraud on the way up, but they certainly care about it on the way down. It's another thing that makes 100%. Me think that we're in a bear market because suddenly everyone woke up and just to summarize, you should listen to Jason and Santiago. Look at me taking the high road, promoting our competitors' podcast here.
Oh, you are. Wow.
Look at that.
You are good. Yeah. You are good.
Very magnanimous of me, very magnanimous. But you should go check it out because they did like a whole deep dive on it. The title is Fraud in Frog Nation. And you know what? It was a wake-up call to me because I was like, come on, man. Are you kidding me? Like, this guy is a 15-year career criminal. And look, these are all allegations at this point. I don't know the full story. These are communities that I'm not frankly involved in, so I don't want to pass a lot of judgment yet. But, you know, there are definitely, less than savory actions that are going on in crypto. This is the time to root them out, guys.
Galbraith. Yeah, John Kenneth Galbraith wrote about this in the 1920s. It's called the bezel. And the bezel, right, which is the amount that's stolen, has existed since the beginning of time, right? As long as there's been money, there has been
I feel like I've read this.
Shenanigans. Yeah. Mm-hmm. And the bezel expands in good times, right? Because you can get away with it. Mm-hmm. And no one's cared. No one's looking, right? No one cares about fraud on the way up. Mm-hmm. But then there's an event, and suddenly, oh my gosh, you can't do that. We're right regulation, and we got the 1940 Act, the 1933 Act, and all this stuff happens, and then the bezel shrinks, okay? And then it grows again. And because human beings, some of them, are bad. Not the huge majority, but some, and I shouldn't say bad, right? They'll do bad things. They might not be bad people, but they do bad things because it's easy. It's easier than working. If I can go steal, if I can go do a flash loan and pump up the price of my NFT and pawn it off on someone, I'm not doing anything wrong. Mm-hmm. Well, yes, you are. But fraud is fraud, and the bezel is real. And look, the bezel in the traditional world, in the Teslas and all these other revenue recognition stuff and the accounting shenanigans, it's actually never been higher. Mm-hmm. The amount of accounting shenanigans, non-GAAP accounting, has never been higher. Again, worse than 2000. And
community adjusted
so
EBITDA.
Many rules. Yeah, adjusted. Oh yeah, my favorite.
Remember that?
Adjusted EBITDA. It's like, I mean, WeWork. It's like no, you don't get to say, well, if we hadn't spent all the money, we would have made this money. I'm like, well,
But isn't that easier,
spend the money.
Mark? Isn't that easier?
Of course it's easier. Look, it would... my adjusted workout this morning was awesome. You should have seen that, fictional guy pumping iron. And he's really pissed. This is not another Zubyism. He's really pissed that the rest of y'all were so selfish that you didn't stretch. So he pulled his hamstring this morning because y'all didn't stretch.
It's ridiculous. All right, I know we got to wrap it there. I think when we get to the point where we're talking about fictitious workouts, we've covered everything we need to cover.
Absolutely. Well, look, no, again, such a joy. My oxytocin is surging, and look, these are important topics. Like what's going on when people start throwing around words like national security. Pay attention. But what that really means is they're scared, and they shouldn't be scared. To your point, Michael, they should be embracing innovation. They should be embracing change. They should adapt and overcome. Okay, adapt or die.
Yeah.
I don't want them to die. I don't want the banks to die. I want them to adapt and collaborate.
Yeah.
And I want there to be a choice for my fiat to be digital.
Yeah.
I do. I just don't want it to be controlled where they could turn it off and not make it usable. So I don't know how we manage that part. That's going to be tricky.
We'll figure it out. At the end of the day, everyone's going to do what they're going to do. People are going to struggle and fight, and then the best solution is going to win out in the long run. So,
we may all end up living in El Salvador. I don't know.
Who knows? Yeah. I actually did feel I felt a little bit like, I've kind of come to terms that we're probably in a bear market here, and I actually felt happy about it. And I was like, wow, that's a pretty weird...
They're cleansing.
Yeah, they're cleansing.
Look, their cycles are normal, right? Sometimes you're tired. That's not a bad thing.
Yeah.
Go get some sleep. And roller coasters are fun. I love roller coasters, actually. But the challenge is to embrace all the different opportunities. And I said, if there's not going to be a lot of money to be made in traditional crypto, go find other digital asset playgrounds to play in. And there's incredible opportunity.
Totally.
And so
I'm with you. All right, Mark, that's all the time we have for this week. Best hour of my week, my man. I will see you here same time next week. Cheers until then.
all right, brother.
All right.